but how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you what are the important stocks to watch out for, as well as FNO cues as well. Now let's go across to Vamakshi first, who's here to tell us what's happening in the market front. What are the important cues that we are watching out for today? Good morning, Vamakshi.
Well, good morning, Vinny. It was a painful week for the market last week, and the bears took control. We saw the market fall for the 8th straight day, which is, for the first time in 2 years. For the week, Nifty was down 2.7%, the biggest weekly loss we've seen in the past 2 months. Nearly 44 of 50 Nifty stocks post losses this week. The top drags this time around were Eicher Motors, Hero, BEL, Adani Enterprises, as well as M&M. Now, what caused this fall? It was largely the uncertainties around the potential tariff war, along with the relentless FII selling. The broader markets too saw a very sharp correction, with the Nifty mid-cap slipping by almost 7.4% and the Nifty small-cap was down somewhere around 9%. All sectoral indices too ended the week lower. The top drag this time around was Nifty Realty, that the index was down nearly 9.4% for the week. Nifty Auto and Nifty Pharma were some other indices that closed nearly 6% lower. On the flip side, when we look at the US markets, they had a good run. All three indices closed in the green, with S&P 500 posting a gain of 1.5% for the week. Dow Jones was up nearly 0.6% and Nasdaq was up 2.6%. As far as the cues for today are concerned, we will be keeping an eye out on India's trade balance data. The US markets will of course be closed, so we will not have many cues coming in from there. But apart from that, in the rest of the week, we will be keeping an eye out on the FOMC meeting minutes, the RBI MPC meeting minutes, as well as S&P Global Manufacturing and Services PMI data for India. As far as Nifty is concerned, the key level to watch out for is 22,800. This has been a strong support zone, so we'll have to wait and watch if the index can sustain above this or not. And lastly, let's also pull up the GIFT Nifty for you. As of now, when we look at the GIFT Nifty, it is suggesting a mildly negative start for the Indian markets.
Okay, thanks so much for that, Vamakshi. But let's look at which are the important stocks to watch out for in today's trading session. A whole host of earnings. So firstly, GSK Pharma, good set of numbers, around a 35% uptick in terms of profit, margin seeing an expansion of around 300 basis points. Good traction was seen across all the segments for the company, as well as cost efficiencies was something that was supporting the margins. Bajaj Consumers, on the other hand, we've seen the profits see a decline of around 30%, revenues are down by 6.3%, and margins, operational performance has also been a bit weakish, so that could come under pressure today. Ethos, on the other hand, we've seen profits seeing a growth of around 16%, revenues at around seeing a growth of around 31%, coming in at 369 crores. Margins have remained almost flattish, just a 40 basis point decline. Keep an eye out on that. Volume seemed to be good, so it'll be interesting to watch out for Ethos and trade. Ease My Trip, that's also in focus. Seems like a weak set of numbers reported by the company. Profits are down by 26%, revenue seeing a decline of almost 7%, and operationally also we're seeing a weak performance where EBITDA margins are down to 31.7% versus 37.9%, so sharp contraction in terms of margins. Glenmark Pharma, a good set of numbers coming in. The company has swinged into a profit this time versus a loss last year. Revenues have seen a growth of 1%. India formulation and India business overall has seen a very, very strong growth on a year-on-year basis, so that'll be interesting to watch out for in terms of more commentary coming in on that front. Overall, they managed to see a good growth. Utkarsh Small Finance Bank, also the company has reported a loss this time versus a profit. Asset quality has deteriorated, so keep an eye out on that. Borosil Renewables, net losses have expanded and widened further, and EBITDA losses at 1.1 crore versus an EBITDA last year of 20.6 crore. BHEL in focus on the back of their order wins, so keep an eye out on all these stocks. But let's move on and talk about what's going to be happening in the world of FNO. What are the important cues that we're keeping an eye out on that? Mangalam is here to tell us more about this. Good morning.
Good morning. So it was a lot of weakness that we saw on Friday. And why just Friday? If you look at all the frontline indices, all of last week as well, we did see a decline, nearly 3% on the Nifty, 2% on the Nifty Bank, and the broader markets were where the pain was felt even more, nearly 10% for the Nifty small cap index after a big drubbing that we've seen already. So that small cap index was down 9.5% all of last week, with the mid caps down 7.5% itself. Key reasons for decline. One was the relentless FII selling that we've seen, and as a result of which there was the weakening rupee as well. Fear and uncertainty around tariffs was another factor why there was some money taken off the table. And the most important of them all, it was insipid third quarter earnings season, where the Nifty posted an earnings growth of just around 4%. And the key events like the budget, the RBI Monetary Policy Committee, all those events were out of the way as well. Speaking about the FII selling in cash, that picked up almost 4,700 crores on an average basis all of last week. And with that, the FIs have sold nearly 30,000 crores in the month of February so far, after having sold around 87,000 crores or $10 billion in the month of January. And they have been selling for the last 3 or 4 straight months. Not just in cash market, they continued to sell in F&O as well. All of last week, they added around 32,000 short contracts, compares with just around 5,000 long contracts. And the FI net contracts, which at the start of the week were a negative 1.6, have moved all the way up to a negative 1.9 itself, with only 16% of FII positioning on the long side, with 84% on the short side. Call writing is getting fairly easy, so we saw a lot of call writing at 23,000, 23,100 and 23,300. At the lower level though, 22,800 put is equally active as well. At some point, there could be a rebound, but to what extent does that rebound lie is something that we'll watch out for. The put-call ratio moved closer towards that 0.7 mark at 0.77, and we have the 20-day moving average for both the Nifty and the Nifty Bank, extremely crucial to track.
Okay, thank you so much for that, Mangalam. But